Welcome everybody into the first weekly recap of August. This is something that I used to do well in the past. Now I'm going back. Now that I'm on the markets again, I'm going to do again is the weekly recap, looking at what the overall picture on gold, what happened, sort of also the price action, if we had any relevant economic data or geopolitical situation that made the price act like it did. And start with Monday. Monday, we had the ISM manufacturing PMI that affected the USD. Wasn't not really impacting. As you can see, price just had some nice trading, overall range trading in 100 pips range from 1775, 1765. You can see this was the New York session, and you can have catch the reversal and not really trending the price. What we see coming into Tuesday is that overall price is making higher lows and higher highs, and we didn't have any relevant economic report or anything on Tuesday. This was of course the week of the NFP, so price action coming to the NFP can always be interpreted as a pricing in, not pricing in. We had some, I don't know if already on Tuesday, some China and Taiwan tension, some talking, but anyway, the price action showed you that the price was making new higher highs after founding a new higher low during London. This one was London. We had this huge demand area that was respected during London to break above the previous supply, break above after some, of course, some fight during New York open, and going break above the strong supply for like 70 pips before getting pushed down, bouncing again from this supply turn demand area, again trying to make a new higher high but failing. So we have this failure to make new higher highs during that New York session, and price started making new higher lows and higher highs. Actually, higher lows were against this demand area, so we were more into a wedge than actually in a downtrend. And let me just remove this so that I can have the chart a little bit clearer. And as you can see, we had this area that was acting as the support. We had this bearish pressure jumping in. Price first broke the demand area, and now the demand is turning a supply. We have the retest started there in late in New York of Tuesday for price to continue down and make a new lower low. This is a move that was 200 pips overall from 1776 until the 1756-ish, and we found a new support. We found also a new demand area because the price left this price level quite aggressively. So that's why also the next day on Wednesday we see the price, it's coming back to these previous lows or the block lows. We are around 1770, 1772-ish, and price fails to stay above. We have a very good ISM services PMI coming very good for the US dollar, and that showing us giving us the confirmation for possible sells exactly at New York Stock Exchange with the new even the 4 a.m. candle especially to retest at least the previous demand area. And as you can see, the previous demand area at 1755 was holding very strong. Overall, we made a double bottom at this 1755, and then we saw a straight bullish move coming from all the Thursday, and we had some also jobless claims coming up, quite poor for the US dollar, but as you can see, we jumped back from 1755 up until 1794, and we also did China and Taiwan tensions. First, you can see the first thing is is that you see price first. Where did you react? At this supply area, exactly. You have this supply and you can enter your cells. You see that then the price fails to make a new lower low, so that this is exactly New York Stock Exchange. New York Stock Exchange opening fails to make a new low and then jumps back up. You have a double top at 1794, 1795, which is also a important key level. We have some bouncing from this supply turn demand, but then on Friday, what we were waiting for the whole week was the NFP that, after breaking a retesting and absolutely respecting, let me just remove this, absolutely respecting the demand area turn supply, sort of resistance, support turn resistance, it dropped like more than 200 pips without a single retracement on the 5-minute candles, and there you go. You have of course a bounce from some demand area, but overall I think this is like 50% of the retracement. Yes, 50-ish% of the retracement. Not like this, like this. Yeah, slightly more than 50% of the retracement, and now we have been consolidating over there, so that makes absolutely sense. Slightly above here, and this is what happened on the price action point. But what I want to see is my trades that I took and the stats. Let me just open this, and meanwhile I open the images. So as you can see, I started the week with a sell limit at a supply area. I was expecting sells here. I placed a sell limit above here, 15-20 pips. I don't remember how much it was. 15 pips, exactly 15. And wait a second. And then we went in profit. I went 10 pips in profits, partials, and then I had the rest, as you can see, just going. I think I closed, if I don't remember, I closed at 37 pips. Over here I could have gone much lower. Then I took a counter trend at this buy area. I wasn't yet rounding up the PSAs based on the PPLs, so that's why this demand area buy level was not exactly on the PPL. Gave me 10 pips and so partials and break even. As you can see, then price showed me a strong bearish move, and this would have been like I think 100 pips more or less, and I then took a loss at a live entry when after this candle closed bearish. This is after the new 4-hour open. The main mistake was that probably we are too far away from the supply area, because I mean, yes, this one grabbed liquidity over there, but then it didn't, and we are coming from a stronger buy and demand area, so that's when I should have not taken, but I should have also taken these buys when the price was making a new higher low after grabbing liquidity and demand. But I mean, I don't want to do the recap for everything. This was pre-New York or slightly after New York open sell. As you can see, volume is not clean, and there was no price action to enter sells. I took another loss afterwards, trying to counter trend at another supply area, and this is one of the weaknesses that I'm going to put here, is that taking counter trend trades at supply or demand at the first single candle confirmation. Sometimes it works, but not always, so I have to be careful and maybe wait for a double top or double bottom. And again, another trades. Now, as you can see, I'm trying to buy at supply turn demand. I go to break even, but in this case, I have to pick a bias. I want to just buy, so why was I selling? I have to buy, and this one was a little bit unlucky because it will stay alive. And again, taking the buy, taking another poor, very bad buy. So one other thing is stick to one bias given by the liquidity pool. Okay, already see this. Entries close to the support or resistance, not 10, 15 pips away. In trend is better. Trend dictated by the liquidity. Okay, and as you can see, I took some sells in continuation because the price was failing to make new highs and rejecting this level and the trend line. And again, taking very, very risky New York Stock Exchange open sells because of, okay, maybe sells. Now we have the retest of the supply turn, the demand turn supply, but also you can see that the price was closing above this previous support. So not always have to stick exactly to the PPL. I don't know, it's something weird. But then I'm able to switch to buys when I see that the price is making new higher lows and higher highs. As you can see, identify that the price made a new higher high bouncing from this previous level, and then I entered at the candle close. Again, this one is an entry at the first candle confirm, but being able to close immediately when I see, okay, this is not the price action that I want to see for sells. So yes, it might have a double top and I might re-enter, but this is not my price action. And again, took another sell. Candles were showing weakness, but again, as you're going to see, this supply area was charted improperly because the supply was like in the middle, and this is one of the cases when the PPL is not necessarily the reference because the candle tops were here in the middle of the level, so there's no reason to round it up. As you can see, now the price action is matching, and I mean, look at this price action overall. Is not clean, it's not trending like this. There are as many bearish and as many bullish candles, so it's not a clean trend like it might be here. Look, all the greens, 2 red, greens, 3 red, all greens. That's why the shifting into a buy setup is not good. This buy is very similar to which one? I saw it before. This one. So I don't know, sketchy price action. One candle is weak, with leaving the lower weak. The very next one is bullish, and I entered buys. And it's the same mistake that I did here. Bearish candle, then bullish, weak, and enter buys. So it's not really working out. Then I think one of the biggest trade of the week, taking 50 pips with the ISM PMI, taking losses. As you can see, first candle entry at a supply, taking second loss, first candle entry at supply. This is the NFP. I didn't take any sell over there. And as you can see, I switch bias here. I should have entered before that. We are at the demand. We have the candle close. I should have entered before. But anyway, I took my 15 pips. This could have been also 20 pips. And then the price is just retracing. So I should not take another sell. I mean, the fundamentals are very bearish for gold. So I should have looked for sells. This one was a buy at a double bottom with this bullish candle close. Okay, but then I switched to sells when I saw the price action that was very strong bullish. There was a lot of pressure. I should have, if I was in just one bias, I would have taken one sell and then one sell. Because, okay, this is the retracement for continuation down. Instead, it being at the demand is a demand area that is like 25, 30 pips big. I don't know. But anyway, I turned bearish and I took two positions. I was unlucky that my second position was taken out after the partials, was taken out at break-even here, because after that the price would go, this last one will go more like 70, 80 pips in profits for my runner. I would have had like 8 to 7 euros more on the account. These are the trades. So 3 top strengths is being able to execute almost flawlessly the trade ideas, being able to manage properly trade when I see the price action is not good anymore, and consistency and discipline. Okay, stick to a bias. No, this is not a weakness, this is an improvement opportunity that I can put over here with the same. Okay, because the weakness is switching bias too often, having weak supply demand areas that confuse me instead of helping, and not always charting them up properly. Improving the charting of PSAs, sticking to one bias, and what else can be improved? Okay, risk to reward, because as we're going to see, it's not good. So okay, this is the trades that I took this week. Of course, there are not that many trades, but closing the partials gives like two trades. So if it's win-win or win break-even or loss and loss, as you can see, taking partial 50% for a loss, 50% for a loss. So in total, I had like 41 trades, mostly is divided by 2, so it's like 3 trades a day. I had an average win of 1.63 euros, average loss 1.3, so there's a risk to reward that is only 1.1, or almost 1.2, and with a 37 win rate, of course, it's not profitable. That's why the expected value of every trade is not good. And average win pip in 17 pips, and average loss is 11. So that's good, because if you think about, I always have 15 or 20 pips stop loss. Being able to always, on average, cut it like to 11 pips, it's very good. If I'm able to push this average win with proper trades at like 20-30 pips, then if I do 30 pips, then this risk to reward ratio will be awesome. And even like a 40-50% win rate will still be profitable. And that's what I'm aiming to with backtesting, with almost the reviews, because what I saw is that, as you can see now, this I took at 10 pips, but if I took it at 20 pips, that would be better. And I'm seeing, as you can see, even I could have taken the first partial 30 pips because the price action was still very bearish. So, and this was a strong supply. So understanding and taking good trades, so not taking this, but taking this buy, which is a good trade, gives me 20-30 pips, even more. Even this trade, this sell, 20-30 pips. If I only take 10 pips, then it's not a good entry. The good entry should have been up here, and this would already be 20 pips, and then will not be stopped out at break even. So I have like 20 pips, and then this one will go more than 120 pips. And as you can see, this one 15 pips, but okay, it goes back. But if I take partials at 20, I think it will get 20, but it's not broken. The stop loss is there for a reason. So I could go further and further. Look at this. This one will go. This one I closed at 30 pips, I think. This one will go for 80, 70, 80 pips. This sell, of course, is not good because almost break even, but it doesn't make sense. Instead of buying at a demand area, that gives me 30 pips, even more. And anyway, it's very, very good. I had a very, very interesting week because also I had a lot of understanding of the price action, understanding it before, understanding the change in market structure, and all not only the trades, but as you can see, understanding the timing, understanding that the price can reject over there. And as you can see, when the price action is good, it's 30 pips easily. So even the buys over there, 30 pips, the buys from the new higher low from here. So that's absolutely good for my confidence, and I will be starting to improve these statistics every week that pass by. I hope you guys enjoyed, and we'll see you on Monday.